This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be doing a shorter video tonight, so we will just be going over the SPY technical analysis. I'm not going to be going over the data sets or anything, but I will do a very brief discussion of the 3-year treasury auction that did occur today. So with that said, let's go ahead and jump straight into the technical analysis. And I would just like to say thank you all who are serving or who have served. We would not have the market or the freedom that we have currently. So thank you all so much. And I hope you all have a great Veterans Day. And getting into the technical analysis, as always, let's go ahead and turn on our moving averages and Bollinger Bands. Now, we did have a very bullish day today, and we discussed how the 5 mile, which was around that 675 for a majority of the day. Um, closer to the end of the day anyway, it pulled up. It was at the 674 something for the majority of the day, but it was close to that level. And what we discussed yesterday, we said that we needed to see if there was going to be buying from that 5 mile level or if there was going to be selling. Well, obviously we had a ton of buying to the upside. So what that suggests is that the market is going to start working its way upward towards that upper Bollinger. Now, we had a very slight 5 mile test today, but between the gap on Friday and where we're at right now, we kind of skipped over the 5 mile. So while we did test the level, I don't really consider it a full 5 mile test, even though it does qualify all the technical conditions to really push up to the upper Bollinger. What I'm really expecting from here is over Veterans Day, I'm expecting very likely some slight downward consolidation, and that might just be us trading right at the exact same level we're trading at right now. Um, But from that 5 mile consolidation, it would pull the, or from that consolidation, it would pull the 5 mile up to around the 679, 680 range. And that puts the 5 mile on Wednesday right within striking distance to have a full 5 mile test. And I believe the CPI is on Wednesday, if I remember correctly. So that would align very well for that 5 mile test to really push up to the upper Bollinger. But with that said, we do have the liquidity um, to entirely fill this gap to the upside. So that 670 range, or that, I mean, excuse me, the 690 range is fully on the table. If we don't claim it within the next few days, I'd be very surprised. But we do need to start pulling these moving averages back into bullish territory if we're going to really be bullish again. Um, Again, the moving averages, we're starting to pull downward. We're starting to consolidate. We had the 5 mile crossing the 10 mile, and it was getting ready to start crossing the 20 mile, but that did not occur. Instead, we had a bounce off that level, and now we need to see the 5 mile cross above the 10 mile again. So that's really what I'm looking for next is that move to have the 5 mile cross above the 10 mile. That's going to take some consolidation of trading at or above the 10 mile level for at least 2 to 3 sessions to pull that 5 mile above it. But that's really the next major step before we have the entire buying occur right back up to the 690. Now, it can happen prior to that. As I said, we do have all the liquidity we need within that 5 mile test. By technical standards, we have everything we need to close the gap up there. So if there's a good tweet tomorrow, if there's a good press conference or a press announcement, something tomorrow, it can be enough to push the market right back up to all-time highs. But I do expect that to be really over the next 2 to 3 sessions. I would like to see the 5 mile really tested, and that means both the upper bounds and the lower bounds. And if you watch my videos, that means the $1 to $2 above and below the actual 5 mile level. Now the ADL has been extremely, extremely strong. So this isn't something to short into. Um, that 5 mile range on the open on Monday was really, really decisive. We were either going to sell off from that range or we were going to buy up. The fact that we started buying up really doesn't kill the bullishness or the bearishness, but it really slows it down. We need to see some of the moving averages retested to the downside if we're going to have some downward momentum from here. But so far, it looks like the 5 mile will want to start pulling back upward. We'll want to retest that 10 mile level, and we will very, very likely see the market price start pushing right back up into that 690 range. And with the upper Bollinger being at the 691, by the time we actually get to this level, uh, the upper Bollinger could be all the way to the 697. That means that this next upper Bollinger move could take us all the way to the 702, 703 range, give or take. And just looking at our structure within our channel, we did talk about how if this was a bounce, we would have to extend the channel out. We're not going to extend the channel out just yet because I do want to see a little more time within this bounce. I want to make sure that really we're seeing this gap filled to the all-time highs, and that will invalidate any form of bear structure. And then you won't have to really worry about, oh, did I extend a channel that really shouldn't have been extended? It'll tell you when it's ready to extend, because it will break the bear structure entirely. Now, with that said, by all technical standards, we are still within a bear structure, even though it looks a little wonky. We do have technically everything built here for both a head and shoulders and inverse cup and handle. Um, Go ahead and turn off the Bollingers, but basically we did create the inverse cup right here. This potentially, if this is going to be some super, super bear trap or bull trap, then we would see the liquidity start breaking back down and we would see this handle closed to the downside. Now, so far, this again looks like a very bullish bounce. It looks like it was wanting to build liquidity off the bottom of this buying channel and bounce to the upside. Um, and again, the upside is just massive right now, because all we have to do is just reclaim a little bit more support here and then reclaim the all-time high, and then it's basically off to the races again. So that looks very good. Again, we're not going to extend this channel just yet, but the likelihood is that we will be. um we just want to ensure that this is actually going to be the bull structure. If this is not a bull structure, then we don't want to extend the bullish channel. We want to set up a bearish channel here. But if this is the bull structure, then we do want to extend the channel because that is a part of that channel. Again, I'm going to do a video later on where I discuss the buying and selling channels a little bit better. Um, for those who enjoy channel trading, it's very, very consistent. The structures hold very, very well. And yeah, so that's that. We bounced out of that consolidation channel. And as long as we're above that consolidation channel, we should be pretty good with basically filling all this buying up or all this selling up to the upside again. Now, I do want to go over the 4-hour time frame just in case I'm missing something. Turning off the drawings here. Yeah, so far that looks like a very nice little bullish cup. From this cup, we can expect a small handle downward, and this can also turn into a really nice inverse head and shoulders once you get that handle down on that bullish cup. Um, you'd get price action something like this, then back up to all-time highs. That would create inverse head and shoulders while also fulfilling the liquidity of the bullish cup and handle. and that'd be a very good breakout. So if you're bullish right now, there's a ton of reason to really be looking upward. A major rejection breaking all the way through the 5 mile below the lower bounds of the 5 mile is what I would really look for a confirmation in any type of selling. But from here, the buying looks very good. It looks very strong. The VVIX pulled down very significantly today. It was all the way up, I believe, at the 102 range. It pulled down to the 98, and we did discuss how once it starts really challenging that 98 again, um, the selling starts getting shaky. It really needs to be above the 98 and, you know, buying into that range to signify that there's going to be selling within equities. So far, the VVIX is just telling us that there is buying. The volatility hedge is not really being considered right this moment. Now, we are seeing a ton of weight being put back into precious metals. Uh, I'm still holding on to my silver and gold shares. I do want to wait for the all-time high to be refilled, and this will turn into a fair value gap. I mean, and very, very likely this gets filled and we will see all-time highs from there. So I was very bullish on precious metals for quite a while when we had that major dip. I told everybody definitely get into that. I know I was specifically calling to buy gold when it broke below the 4,000 range again. Let me see, what is that right now? Gold is almost at 4,200, so it's heading back up to that all-time high level. You haven't really missed out if you're wanting to get into this. There's still, I still think there's absurd amount of upside on gold. Um, I would not be really worried about buying this dip and then worried about it like dipping off a cliff. We're in kind of a weird economic situation right now where gold is going to be very, 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 very good moving into a low interest environment. And even if for some reason we move back into a high interest environment, gold is still very good. It's not tied to any form of interest rate. It's not tied to any form of, dividend payments or anything like that. So it holds its weight without tying interest to it. So it's a very, very strong um, security to be carrying right now, whether you're carrying physical or, carrying it on the gold shares or like the silver shares like I am right now. And I do have some physical silver and everything, but um for me right now it is a lot easier to just just trade it within the actual stocks. So yeah, I am very bullish on that. We should see all-time highs hit again. Now, with TLT and treasuries, again, I am still bullish on treasuries. We still have everything looking very good. Let's see what we got drawings going. We have this big cup right here that still is holding very strong. From that cup, we're expecting a handle. And so far, this is lining up very well for that inverse head and shoulders. And from that inverse head and shoulders, I really am anticipating the breakout back to the 92 and then start working towards that 95.20. Now, one thing that I'm primarily looking at is the 10-year treasury yield. We had it pull up quite a bit on the news with the whole shutdown ending, some of the bullishness with the $2,000 tax cut dividend things that they were talking about with the tariffs. Um, so far, we're not seeing the 10-year really challenging, very, very dangerous levels yet. It did pull up quite a bit today. It was a little scary, but we're not seeing dangerous levels challenged. We're not seeing the major trend challenged to the downside either. This downside trend is super, super strong. Um, I'm not very worried about this moving back upward. Another thing that I wanted to show, even though I don't have the exact yield in front of you that I can show, um, the 3-year Treasury auction today came in at 3.579%. The previous one was 3.576%, so this technically came in 0.003% higher. Um, that's nothing in regards to everything. Now, the actual auction itself went very, very, very well. Only 9% of the bills had to go back to the bank. That's massive compared to the general 20 to 30% that go to the banks. And this was a very large auction. I believe this was a either 5.6 billion or a 56 billion dollar auction. So it was a very large auction for clearing out some of these lower uh, duration notes. We also saw the 3-month and 6-month yield come in under as well. So that is telling us that even though there's some of this, you know, hawkish talk about a strong economy, lowering the dollar, blah, 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 the yields are still showing that we're not so sure about that strength. Right now they're holding pretty neutral in terms of any form of pivot in terms of inflation or major outlook. So far, the treasuries are telling us that they're not really buying a inflation story. If they were, we'd be seeing the 10-year and everything climbing quite a bit higher. We're not seeing that really at all. We're seeing, even with the 3-year note holding pretty much neutral, that's basically telling us that the current yield on the federal funds rate still needs to be cut. So take that for how it is, but everything is still telling us that the yields need to come down. Now, we do have the 10-year Treasury auction on Wednesday. That's going to be very, 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 very key. Um, I will be talking about what's going on with that auction. Um, but yeah, other than that, we're going to end the video there tonight. I hope everyone trades safe. I hope you all have a great Veterans Day tomorrow. Remember why we're actually, you know, thinking about Veterans Day. Don't just go out and barbecue with your friends and family. There is an actual purpose to it. Remember the veterans. Now, with that said, I hope everyone has a great day. I will talk to you in my video tomorrow. Trade safe. Expect a slower trading day tomorrow with the banks being closed. So don't go crazy trading lower duration stuff. It doesn't clear tomorrow's trading day. It won't clear until Wednesday. So just remember that's not just the few retail traders, that's every single trader in the market. So keep that in mind. Liquidity might be low tomorrow, so I am overall expecting a very choppy day. I'm really not expecting too big of a move tomorrow, but again, some days that have low data, that have low, potential volatility are some of the days that the market runs the hardest. So just keep that in mind. Really keep your eyes on the VVIX. That's going to tell you if the market's really wanting to buy, if it's wanting to sell, or if it just wants to kind of idle out. If it wants to idle out, then you're not going to see the VVIX moving up or down. It'll just kind of be sitting in the same spot. So, okay. Yeah, with that said, have a great day, and I'll talk to you in tomorrow's video. Take care.